Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Earlier this year, we spoke with Daniel Foggo, the CEO and co-founder of Plenti, Australia's largest consumer fintech lender and a supporter of this podcast. Plenti's made a series of announcements this year, positioning itself as a leader in renewable energy financing, from an increase in loans for electric vehicles to a partnership with AGL for home batteries. There's plenty to talk to Daniel about. Daniel Foggo, welcome back to Fear and Greed.
Thank you, Sean. Thank you for having me. Pleasure to speak today.
Now, before we get into all that exciting stuff, what's it like in your job when markets are doing what they're doing? Because you're relying on the market to raise money, obviously. And when you've got kind of changes in bond yields of, 30 basis points and things like that, pretty incredible.
Well, I think, the key is just keep soldiering on and doing what you're doing. If what you're doing is working, then just stick at it. And it happens that we're a public company. We're listed on the ASX. But, what happens on your share price doesn't necessarily reflect how you're seeing your opportunities and your day-to-day business performance. So we just keep doing what we're doing.
Yeah, just parking the share price part of it for a moment, though, just actually finding money to lend, is that harder when markets are volatile?
We've got incredibly diverse funding, and I think that's a key differentiator of our business. We've got warehouse funding from banks. We've issued 3 ABS transactions, and we've got a platform called the Plenti Lending Platform, which has attracted over 25,000 retail investors to fund loans. And so we've got very diverse funding. So no, we don't really have much concern, if you like, around the supply of funding to fund our loans, given that diversity.
Okay, let's get into renewable energy loans. Demand shot up more than 50% in the year to June 30. So what are your customers using the money for?
We are a significant funder in the Australian market of solar panels and also home batteries. In fact, we believe we're the largest funder of home batteries in Australia. The genesis of that is the fact that we've actually run 2 government-sponsored or state government-sponsored home battery subsidy programs, one in South Australia and one in New South Wales. So that has given us a real presence in that market. It's allowed us to build relationships with a lot of vendors of renewable energy equipment. It's allowed us to, build relationships with the manufacturers of home batteries, and also with energy retail companies such as AGL, as you mentioned. So we see ourselves as being really well positioned in that market with a lot of exciting opportunities ahead.
Okay, so what is the deal with AGL batteries?
Well, actually, if you wind it back a bit and you just think about the opportunity around renewable energy in Australia, about 10% of the consumption of electricity or the supply of electricity on the grid is from solar panels in Australia. There's about 3.2 million installations in the country. That represents about 25% of households. We're sort of world leaders in solar, but we're not really in the mainstream still. There's, 75% of households who don't have solar. There's a very large number of homes that don't have batteries because penetration of batteries is extremely low. Only about 5% of solar installations at the moment are coupled with batteries. So there's a large untapped opportunity there and plenty left to do. If you think about electricity prices going up, that drives a greater rationale for people to install solar panels and home batteries. If you also think about the expectations for rapid uptake of electric vehicles, that's another reason for one to start thinking about installing solar and home batteries. And in fact, look, we actually sponsored Accenture to write a report at the start of this year looking at the bundling of solar panels, home batteries, and electric vehicles. And some of the conclusions of their report were really quite compelling. And that starts with very basic things such as, if you buy an electric vehicle, it is cost competitive with a combustion engine over the lifetime of that vehicle now. And actually that report was written when fuel prices were a bit lower than they are now. If you then go and install a solar panel or solar panels and a battery over the lifetime of that vehicle, and despite the upfront cost of the equipment you're purchasing, you'll save around $12,000. The average household by installing this equipment can reduce their power bills from about $2,000 a year to about $230 a year, even if they purchase an EV by buying solar and a home battery. So it's quite compelling for households to invest in this equipment.
Can I ask a really dumb question here, Daniel? And this is pure self-interest. So if I can buy that infrastructure, the solar panels, the battery, the electric vehicle, The actual infrastructure to get the solar panel energy to the battery to the car, that's all part of the deal. And so the numbers you're talking about is you're investing upfront in that, and you can say, $12,000 over the lifetime of the car, $2,000 to $200 for energy bills by putting in that upfront cost. It's as easy as that or not?
It is as easy as that. And I think there's critical elements to make that happen. One is finance to make it easier for people so you don't have to pay the upfront cost. And that is where Plenti comes in. And then also there's a role to play for us to work with energy companies. And that does bring us to the relationship we have with AGL. So we have worked on what we have described as a bundled energy solution with AGL, and we're rolling that out with other energy retailers. And first and foremost, what this does is it's an innovation that makes it easier for households to transition to a clean energy home by combining their finance plan with the purchase of solar and a battery and the energy retailer's energy plan. So you can go through one application to sign up to the finance, to buy the equipment, and to sign up to an energy plan. A very seamless process, and you can make one monthly repayment via your energy provider, but via AGL. And we do all this sort of work and heavy lifting in the background to make that a seamless experience for the customer.
Stay with me, Daniel. We'll be back in a minute. My guest this morning is Daniel Foggo, co-founder and CEO of Plenti. Plenti is Australia's largest peer-to-peer lending platform. Exactly how does it work?
Well, we have tried to make it as easy as possible for people to invest in what is the largest asset class in the world, and that is debt. And so we are providing people with access to predominantly consumer loans. They can do that via our website or via the app that we have available via the App Store and iPhones and Androids. You can start investing from $10, and the way you invest is via a marketplace. We've sought to make that as simple as possible for the investor. You can choose to invest in our rolling market, so you are investing in short-term loans, or you can invest in our 3-year or 5-year investment markets. So your funds are committed to longer-term loans where ordinarily you'd be earning a higher return. Or finally, you can invest in our green energy loans, so loans that are funding solar panels and home batteries. We don't set the rates. The rates are determined by the supply and demand for funds. So from an investor's perspective, you would log on to our website. If you looked at our 5-year investment market, you might see that the rate today, it's about 6.5%. You might see some borrower orders that sit in that market. If you set an investment order at a rate of 6.4%, your funds would be matched immediately. If you set it at a higher rate, say 6.6%, then much like a stock market, you'd be in a queue and it's first and next matched at each rate. So if the market rate increases to 6.6%, then you'd be funding loans.
What are the loans for? I mean, are they the loans that you're providing?
Yes, they are the loans that we are providing. They are loans to creditworthy Australian borrowers, and maybe it's worth touching on that. Our average borrower has very strong credit characteristics. Our average credit score across the whole portfolio in the business is over 800, which is very strong. For our personal loans, the average credit score of our customers is actually above the Big Four bank average credit score, as we understand it. The majority of our borrowers are homeowners, which improves the credit profile. The average borrower is about 42 years of age. So we're actually surprisingly underweight for a fintech business, borrowers under the age of 30. So, as I mentioned, this is an established asset class. It's a very stable asset class, and that's what we're providing access to.
I'm trying to work out on the risk spectrum. If I have $100,000, $10,000 that I want to invest effectively, where does that sit on my risk spectrum if I decided to go to the marketplace?
Well, we've funded via the Plenti lending platform just shy of $1 billion.
Oh, wow.
And we've paid investors over $80 million of interest. And every investor's got every amount of interest and principal due to them. So we've provided the returns that were expected by investors. It's been a very stable and reliable experience for investors, obviously with the caveat that historical experience isn't a guide to necessarily to future experience. But one of the ways that we do that beyond lending to prime customers is we have a fund called our provision fund. So we have borrowers pay into that fund. So part of the cost of their loan can be to pay into the provision fund. And that fund is there to help protect investors from any late payments and default. And so the history over the last 8 years of us funding loans via that platform is that whenever there has been a late payment or a default, the provision fund has stepped in and compensated the investor. So they haven't actually noticed that there's been a late payment or default from the borrower. And in fact, that provision fund now represents in the order of about 8% of the loan book. And it's over 2 times the expected losses that we expect to see over the next 5 or so years on that retail platform. So we think that is the key thing to making it a understandable risk from an investor's perspective, and to make sure that investors see it as a sensible risk-adjusted return.
Fantastic. The more I think about this, in a sense, it's the ease also of what you're doing that's beneficial to me, for example. So I kind of get now, I understand my potential for losses, and I understand kind of the platform. For me to do it, though, it's about being easy to do. And I presume that's one of the things that Plenti prides itself on.
Indeed. Look, we are a technology-focused business, and we have over 50 people in our business who are focused on product and technology, and that is all about making an easy experience for customers, whether they're a borrower, because that helps us attract the best borrowers, or whether they're an investor. So one can actually, sign up, go through the process to open an account, go through all the AML processes and so on. We make that as seamless as possible, and you can start investing, almost as soon as we've gone through that process, which is very rapid. And as I mentioned, you can start investing from $10. What we find is people will often start investing in our shorter term markets. They'll have a good experience. They'll transfer more money on the platform. And that's led to an average investment on the platform of around $20,000. And we also allow people to invest via SMSFs, and the average investment via SMSFs is actually approaching more like $100,000.
Fantastic. Daniel, thank you for talking to Fear and Greed.
Many thanks, Sean. Good to chat.
That was Daniel Foggo, co-founder and CEO of Plenti, which is a supporter of this podcast. This is a Fear and Greed daily interview. Remember, this information is general in nature, and you should always seek professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.